Okay, something really interesting is happening in the global tech world right now. It's like a tale of two completely different markets. Over in the US, you've got everyone whispering about an AI bubble and fear is starting to creep in. But then you look at Korea and it's a full-on celebration, all thanks to a semiconductor boom. So what is going on here? Why the huge difference? Let's break it down. So let's start in the United States, where frankly, things are looking a little shaky. We're talking 3 consecutive days of losses for the major indices, the S&P 500, the NASDAQ. You can almost feel the anxiety building on Wall Street. And this isn't just a gut feeling. Take a look at the VIX, the volatility index. It's basically the market's fear gauge. Well, it just spiked by 13%. Whenever you see a jump like that, it's a pretty clear sign that investors are getting really, really nervous. And if you need any more proof, check out CNN's Fear and Greed Index. It is absolutely plummeted into extreme fear territory. So what's driving all this panic? Well, it really boils down to two huge concerns: the growing fear of an AI bubble and the fading hope that the Fed is going to cut interest rates anytime soon. All right, let's dig into that first big worry, this potential AI bubble. For months, AI stocks have been the engine powering this market rally, pushing everything to new highs. But now, some very influential people are starting to sound the alarm. And we're not just talking about random analysts. We're talking about the heavy hitters. Goldman Sachs, Morgan Stanley, they're now openly warning that tech stocks are seriously overpriced and due for a big correction. And when those guys talk, the entire market listens. But this goes beyond just warnings. There's actually one legendary investor who is putting a massive amount of money on the line, betting that this whole AI party is about to come to a screeching halt. That's right, it's Michael Burry, the guy from The Big Short, who famously predicted the 2008 financial crisis when almost no one else saw it coming. And what's he doing now? He's making huge bets against AI poster children like NVIDIA. I mean, when the guy who's famous for seeing crashes before they happen starts betting against the market, you've got to pay attention. And this slide really gets to the heart of Wall Street's anxiety. We're seeing companies pour billions upon billions of dollars into developing AI. But the big question mark, the one keeping investors up at night, is when will we see the payoff? When does all this massive spending actually start generating real, tangible profits? Right now, nobody has a clear answer. Okay, so that's the AI bubble fear. That's one major storm cloud. But there's another one brewing right alongside it. And this one has everything to do with the Federal Reserve and interest rates. Just look at this chart. It's stunning. Only 1 month ago, the market was pricing in a 90% chance of an interest rate cut in December. It was basically seen as a done deal. But now, that probability has collapsed to just 40%. That's a dramatic, whiplash-inducing shift in expectations, and it's sending shockwaves through the market. So why the sudden reversal? Two big reasons. First, inflation is just proving to be incredibly stubborn, staying stuck around 3% when the Fed's target is 2. And second, the economy is just too strong. Recent data shows it's still running hot. Both of these factors are basically tying the Fed's hands, telling them, nope, not yet. You can't cut rates now. And to top it all off, we're seeing some troubling technical signs. Both the S&P 500 and the NASDAQ have fallen below their 50-day moving average. Now, for traders, that's a classic bearish signal. Think of it like the check engine light on your car's dashboard just started flashing. It's a warning of a potential short-term downtrend. So that's the gloomy picture in the US. But now let's fly halfway across the globe, because in South Korea, they're singing a completely different song. It's a whole other world over there. And this right here really sums up the massive split we're seeing. The US market is getting dragged down by bubble fears and rate anxiety. Meanwhile, the Korean market is soaring, lifted by a boom in memory chips, rising prices from giants like Samsung, and a flood of money from foreign investors. It is a true global tug-of-war. But here's the crucial question for Korea. So much of this positive momentum is being driven by foreign investment. If those investors get spooked by what's happening in the US, will they stick around? Or will they pull their cash out, potentially ending the party before it really gets going? So how is this possible? How can these two realities coexist? Is the US right to be scared? Or is Korea right to be optimistic? Well, the answer isn't so simple. It all comes down to the fundamentally different roles each country plays in the larger AI ecosystem. So, are we looking at a bubble about to pop? Or the beginning of a massive new supercycle? And why are these two leading tech nations seeing it so differently? Think of it like building a new city. The US, with companies like NVIDIA, they're the architects. They're designing the brilliant blueprints for the AI software, the very brains of the operation. But Korea, with giants like Samsung, they're the construction crew. They are manufacturing the actual hardware, the memory chips, the foundational bricks and mortar that the entire AI city has to be built on. And this is the absolute key takeaway. You simply cannot have the city without the bricks and mortar. Before anyone can run a single piece of revolutionary AI software, the physical hardware infrastructure has to be built first. There's no way around it. This quote really just says it all perfectly. It doesn't matter if AI software ends up being a gold mine or a total bust in the short term. To even get started, to build that initial infrastructure, you absolutely need memory semiconductors. They are the essential, non-negotiable first step. And so that's the answer. While the US market is anxiously debating the future profitability of AI applications, Korea is busy selling the essential tools needed to build that future. They aren't selling lottery tickets for the gold rush. They're selling the picks and shovels to every single person who wants to dig. So you have to ask yourself, in this new AI revolution, who's making the safer bet? The dreamers or the builders?